Hi traders, does this happen with you too? You draw support and resistance. As soon as the price breaks the resistance, you make your buy entry and the price comes down from there and you suffer a loss. Why does this happen? Because you people do not know where the big players are buying and where they are selling, due to which you draw the wrong support and resistance. So in this video I will tell you how to draw support and resistance levels correctly. And yes, at the end of the video I will tell you such a strategy which is 99% accurate. And trust me, this video contains the information for which people are charging thousands of rupees, but here you are getting it for free. So without wasting time, let's start. Support and resistance is a very important concept of technical analysis, and let's understand how to understand these terms and apply them practically. Support is the level from where the price stops falling and bounces back because buyers become active there. For example, if the price comes from 100 to 90 and then goes back to 100 and then comes back to 90, then we will have a support zone, and after this there will be high chances of the price going up from here. So resistance is the level from where the price stops going up and starts coming down. For example, if the price goes from 100 to 110 and comes back to 11 and then comes back to 110, then we will have a resistance zone. After this there will be high chances of the price falling down. As you can see on the chart, we have a resistance area, and whenever the price came here, it came down from there. And when the next time the price comes to this level, then there will be high chances of the price coming down from here. And here there can be a good opportunity for a trade. That is why support and resistance are so important. But a common mistake that all beginners do is that they draw too many lines on the chart, due to which they get confused. Traders do this because they do not know some rules of support and resistance, which I am going to tell you now. So, the first rule is multiple rejection. This rule is that to validate the level, the price should stop at that point repeatedly. Look here. Here we can see that the price came down from this level 3 times and went back up, which got multiple rejection here. So here we can create a support zone. You can see the same thing above as well. Whenever the price went up to this level, it came down from there. So here we can create a resistance level. And the bigger the rejection, the stronger the breakout will be. Now a question might be coming to your mind that how will we draw support and resistance on such a chart where there has been no multiple rejection? For this you have to understand the second rule, that the swing low and swing high of this time are the strongest support and resistance. In this example, the price did not bring multiple rejection here, but the price made a swing high from there and reversed from there, that too with a big green candle. In this situation, you can draw a resistance zone here. Next year also the price came down slowly and the price increased from this level. That too with a big green candle, so you can draw a support zone here. This can be an important zone. So, the third rule is level can be both support and resistance. This means that both support and resistance can be the same. Support can act like resistance and resistance can act like support. Now see here, the price reacted here multiple times. So we can draw a support zone here, and as soon as the price breaks this level and comes back for retest, now it is acting as a resistance. You can see that what was earlier a support has become a resistance. The fourth rule is near current price. Meaning, whatever level you draw, the price of that level should be around the current price. See, whenever you draw levels on the chart, you do not have to draw such levels which are very far from the current price, which is what I did here. You do not have to do this because we do not need these levels. We have to draw only those levels which will be useful to us, and you do not have to draw too many levels, otherwise you will get confused. In this situation, you have to draw a support zone here because whenever the price has come here, it has reversed. That is, there is a high chance that it can reverse from here also. And a resistance has to be drawn here because the price has come down here multiple times after being rejected. Hopefully you must have understood all these rules. Let us now see how to apply it on the live chart. Here we can draw a resistance level, because whenever the price has come here, it has come down after getting rejected from there, and this is the strongest resistance level for us. And we have drawn this level because it is very close to the current price. And the last time there was rejection here, the price comes down very fast, that too with a big red candle, which makes this level a swing high. Here we can draw a support zone because whenever the price came here, it has gone up after getting rejected multiple times. Therefore, we can consider it a strong support. And when the price finally breaks this support and next time comes back for retest around this level, then this level is acting as a resistance, which we can say that the support zone itself has become the resistance zone. And most importantly, this is not a line, it is a zone, meaning this entire zone is acting as a support. Therefore, no single candle can reverse from a particular area. The price can reverse from this area anywhere. Look at another example. There has been multiple wall rejection here, so here we will create a support zone, and as soon as the price comes near this level, it reverses upwards from there. And similarly, there's a resistance area above, so here we will create a resistance level. Both support and resistance are very close to the current price. So here we have a strong support and resistance. Now you people have learned to draw support and resistance levels very well. If you have any doubts, then definitely ask in the comment section. I know you people are waiting for the strategy, but I will not be able to make you wait much. Now I will tell you such a strategy by using which you can make a good profit. So the name of this strategy is 3-touch resistance strategy. In this strategy, a stock has to be bought only when the price has touched and broken the resistance more than 3 times. 3 times is the minimum requirement. It can also happen 4 times, 5 times and 6 times, but 3 times is the minimum requirement. Meaning if after touching the resistance 3 times, it breaks out upwards, then you can make your entry there. Because there are chances of price rising here. You can see here that the price first touched the resistance and then touched it again and tried to rise. But it could not rise here. And then it tried to rise for the 3rd time as well, but could not rise again and then came down from there. And when the price came near the resistance for the 4th time, it gave a breakout here. And as soon as the price gave a breakout here, after that we got to see a big move. If this move seems small to you, then I will measure it and tell you. So see how big this move was. Just opposite of this strategy is 3-touch support strategy, in which when price touches its support 3 times and gives breakdown downwards, then there are high chances of price coming down. There you can do short selling or buy put option. So, you can see here that price took support and then again took support here, and for the 3rd time also, and for the 4th time also, and for the 5th time when it gave breakdown here you can see how big move was seen. If we measure it, then you can see how big profit it is. But a question must be coming in your mind that how will we draw this type of zone? So here you see you have to go to this brush section and take the rectangle here and draw it here like this. Now look, this strategy that I have shared, I have done it after searching on the chart, but there will be many such places where this strategy is not working and you must have seen fake breakout. So let's see how to avoid this. So wherever you apply this strategy, you have to add an indicator there. You have to come to the indicator section, and after coming here you have to search for volume, and as soon as you search for volume, you will see volume here. You have to click on it. So you will see a volume section on the chart. This is normal volume. So how will you know that the volume is high here and low here? So we will go to its settings, and here you will see the MA section. So you have to tick it and click OK here. Now you will also see a line along with the volume, which is the moving average of the volume. So if you ever see this line above the volume, it means that a strong breakout has taken place here. So here you see that the volume is also high here, and there was also a breakout here, and you can see how big a move was seen here. Look here also, breakout happened here and with high volume, so this is a genuine breakout. So whenever you use the breakout strategy, you must also use volume there. If you find the video innovative, then like the video and subscribe to my channel. And yes, if you guys are interested in knowing my secret strategy, then go and watch the video that is coming on the screen. I have revealed my secret strategy there. So, end or we will meet there.